It's May, and we've got a real estate market update for you for here in Austin. I'm David Shapiro, and my colleague Lee Abraham with the Shapiro Group. If you were thinking about selling or buying here in town, don't hesitate to reach out. We'd be happy to help you and answer whatever questions you have, guide you through the process. Let's go ahead and dive in to what we're seeing. Remember, you can always find us at realestatevideohub.com to get back to our YouTube channel quickly. So here's what we got for active listings. Wow. Okay. This is the jump I think a lot of the bears have been looking for in the real estate market. Inventory up significantly. Now we're at a highest level number of active listings in the city of Austin that we've seen in quite a long time. Let's look at it though, based on factoring how many sales we're seeing. So Lee, how is that looking?
Well, basically, when we take a look at the number of sales per month, we always start with the pending sales. And that's kind of a leading indicator in the real estate statistical world. And over the past 30 days, there have been 683 pending sales. So if we divide the active number of 3,558 active listings by the 683 sales over the last 30 days, you can see it's about a 5.2 month inventory. It's a big jump, David, from where we were last month. Any of the metrics, whether it be closed sales over the past 3 months or even the past year, are kind of in that mid 600 level. And so when we look at the table, the chart there to the right, with various ways of parsing out the monthly housing inventory, any way you slice it, we're somewhere over 5 months. And what we're going to see is the 1 month closed sales. Next month, when we're doing this report, the 683 will translate into closed sales, and there'll be a portion of those that don't close because they fall out. And so we're going to see a monthly housing inventory next month that's going to be approaching 6 months. And so duly noted on this end of the analysis as we parse out some of the underlying dynamics. But clearly, we mentioned last month the inventory is going up, and now it's really starting to show, particularly in this monthly housing inventory view.
Yeah, I think we're going to get to a stat towards the end, a chart that I think is going to illustrate potentially where this could be going. So we'll get to that. Let's look at this over time. So here you can see where we're at 5.2 months of inventory. The general seasonality is what we're seeing here. And then, of course, going back to what some people refer to as ZIRP, zero interest rate policy, before they started raising interest rates. And I did hear that there's a potential rate cut coming this month. So we could talk more about that when we get to mortgage rates. But this is certainly a huge jump. You know, I don't know if you look back at this chart, if we see as big of a jump, not even when rates were rising, was there a 1 month jump of this magnitude. So as a leading indicator, not a great sign for people that own real estate, for sellers. Maybe good if you're out on the hunt and you're looking for a deal, but I don't know. It could be argued it's just not good for anybody if the market's gonna seize up.
Yeah, it's interesting. Having worked in some downward trending markets over the decades, that downward trend is a killer because even buyers are hesitant to get in because they think the price is going to go down. And so it can be crippling and a self-fulfilling prophecy, if you will.
Yeah.
And so we're going to break it down a little bit, David, here on some of the next slides.
And we know how hard it is to time markets.
Right.
So, and then just the psychology, like you're saying, they're hesitant to get in. If they do get in and prices keep going down, they're like, oh no, I could have waited. So yeah, it's a lot easier. And, I look back at my experience buying in 2011 to 2020, and it was just really nice, consistent growth. And you knew if you got in, okay, it would probably go up the next year and the year after that. And you could just kind of dollar cost average into the real estate market. So what's been created since 2020 with all this volatility in both directions, I don't think is generally good. Some people really worked out. They just got lucky with their timing, but we'll see. All right, let's keep going. So, all right, we're talking about Lake Austin. So Lee, what do we have here?
Well, David, we are working in this submarket, both on the listing side as well as with buyers. And so when we were tracking some of the stats and we saw the tremendous increase in active listings, it's kind of mirroring this submarket of Lake Austin housing inventory. If you want to kind of break down where we're at with some of these
Sure.
stats, I'm sure we'll be taking a look in some more detail now.
So downtown is just over this direction. And so the really desirable, all of Lake Austin's desirable, the even more desirable section, this is the 360 bridge, technically known as the Pennybacker Bridge. And so this section south of the bridge is the most desirable real estate in Austin. These are all waterfront properties. And so on the west side here, you have, Westlake. On the east side, you have Terrytown and some other neighborhoods to the north. Mount Bonnell, which is a famous landmark, is in this area. So lots of desirability over here. And then west, also really amazing waterfront properties. And the only reason they're not as desirable is probably proximity to downtown, or maybe, school district can play a role in some of these. So those are kind of the two main sections that we are looking at here.
Yeah. So if we break down the numbers, there's 21 active listings of waterfront property. There have been 7 closed sales in the past year. So that's one sale every 2 months or half a sale a month. That's a big inventory, David. We take a look at a 6.5 month inventory as being a balanced market. And so you start getting into this stratosphere, it puts downward pressure on pricing. And so, these properties, waterfront properties, are very interesting in a lot of ways. One is price elasticity, because they're a luxury product. There's an aesthetic that you really can't recreate. And so, supply and demand drives it, but it only takes one buyer, to make a deal on a property and maybe pay more or less than the market value. So it's very interesting when we're working with our clients. We've got an active listing on the east side of 360 over on Island Cove, right where David is pointing. And we're working with a buyer that's actually focused on that side as well as on the west side. So we've kind of had it firsthand, and maybe you could show some of the other stats on the high, the low, and some of the things that are on the next slide.
So here it's broken out by active, closed, and then all. There's, just to point out, we included pending sales, but there's currently nothing pending on the MLS. Lee, I think we'll also mention there are properties in this, in anything kind of in the $2 million plus, sometimes even as low as $1.5 million. There's a lot of off-market listings. We have seen a bunch hit the market off market where we're seeing them. They're not available on Zillow, and we send them to clients directly. And so that's not taken into account this data, but there are even more active listings there. Not as many. It's not like there's 21 of them, but somewhere a handful up to a dozen that are off market in these areas. And then the 7 closed sales. So I think looking at the average is probably the most applicable line here. So these homes are on average 4 bedrooms, 5,300 square feet on a almost 40,000 square foot lot, and acres, like 44, 45,000. So 0.9 acres, you can see that there. And they sell, they're listed for on average 1,800 a square foot, which is 8.7 million. And then the closed sales on average are smaller at 3,600 square feet. And the closed price is a lot lower at 4.7 or 1,500 a square foot. So not only lower on the price per square foot, but because the square footage on average is lower, then the total price is, not quite half, but almost there.
David, one thing I'll point out, I know price per square foot can be a useful metric. However, on this type of property, it can really lead you down the wrong direction because there's so much value in the site. And so one way to just quickly look at that is that the average acreage on the closed sales is 0.78. The average acreage on the active listings is over 9. May not seem like that much on paper, but it makes a big difference depending on where that extra land is, how great the view is, and those type of things. So speaking directly to buyers and sellers on these type of properties, price per square foot is something we look at, but there's a much more involved price adjusted sales comparison analysis that uses appraisal methodology that we use when working with our clients to really zero in more accurately on, what the pricing should be for a property.
Yeah. I think that's good for buyers to know because I've seen buyers and even agents sometimes get too caught up on the price per square foot. That's really just a preliminary thing we look at, something that's maybe helpful in these types of analysis when you're trying to look more broadly. But when you get into specific properties and making offers, we're very rarely looking at the price per square foot. We're doing, like Lee said, actual adjustments based on contributory value of different features of the home.
Right.
Do we want to look at days on market? We got average of 150 here on the active homes. The closed homes were also around 150. So this is a view of a lot of I think maybe all of those listings.
Yeah.
And what we wanted to look at here is it's sorted by days on market. And so if we look at the last 60 days, that comes all the way down to here. So these first 16 listings out of 27, all in the last 60 days, really feels like it's accelerating with the number of listings that are hitting the market here, with 10 in the last 30 days.
Yeah, and the thing that's fascinating is that several of these are on the same street or even next door to each other. And so
3111 Ski Shores, 3111, 3113, 3111 Ski Shores. Manana is right in that area, and look, there's two Mananas next to each other. So they are very close. I will point out, actually, these two are sold, and they sold in January and February, so they were not listed in the last 30 days. But they were only on the market under 30 days.
Right. The days on market was the key there. So the point is that, if this is a market that you're interested in, there's a lot of details and some very interesting market data. And I think some very interesting opportunities, David, particularly on the buy side right now for people who've been coveting waterfront property. So just thought we'd share some of this because we've been seeing it on a daily basis.
Yeah. And I will point out, going back to this slide, 42 months of inventory. So that is significant. Like we were talking about, for the whole city, we're under 6 still. So to have 42 months of their inventory in this area, that's significant. All right, moving on from lakefront. So the number of sales per month, we've got down 18% year over year. And that's a low number looking back over Aprils of past, down 3% month to month.
Yeah.
We are recording this pretty, on the second, so not every sale has been recorded, but, maybe we'll get over the 709 last month. So maybe that month to month reverses. There's a chance there.
Yeah, but it's a low number based on what we've been forecasting. It's going to ripple through the next few months. And the key here is, we speculated or discussed last month the impact of tariffs on the market. At the time we recorded, we really hadn't seen any market evidence that it was impacting things. But, this type of a macro could be a double-edged sword where sellers feel like they need to sell and buyers feel like they don't want to buy. And so we're going to parse that out on a statistic coming up soon. But it's the type of market sentiment that could be crippling in the short run if the trend continues where sellers feel like they need to get this property sold and buyers are hesitant to jump in. So it's a switch in sentiment, David, on what we've been talking about and seeing over recent memory.
And this is more of a lagging indicator.
Right.
And we were up year over year, up month to month. I think there's also an effect that people are selectively selling. The people that see that their home value is at where it was near the peak or up even are likely to sell because it feels better. I do the same thing in my stock portfolio. I'm like, oh, I feel okay selling this one, but this one that's down, I'm going to hold that longer. It's not rational, but it's what you should be selling things based on is their outlook, not based on what's happened in the past. But this is a trailing indicator, so we'll see what this does here as time progresses.
Yeah, good to see, though. And then days to sell, it's been dropping as we've been forecasting. It's kind of settled into a average, if you will, since 23. If we can keep this, so again, as we're looking at that big bump in supply and kind of a middling demand, this is going to be a good indicator over the next couple months if this starts to balloon up again, countering seasonality. And so we're starting to look for some interesting trend lines, David.
Sales price to list price ratio, nothing to report here still?
Nothing to report here, 97.8, if you will. So hopefully that stays stable as well.
All right. Well, you said this one was an interesting one. So what do we have here?
Well, the thing that I thought was interesting is that the 1,783 new listings for the month of April originally looked like it might be the high going back over this 5-year scan, but it's actually not. June of 22, there was a greater number for that month. But if you look a little deeper, the current March-April 2-month combination is the biggest delivery of new listings for a 2-month stretch in this 5-year span. And so I think that again, is a layer of data that we are tracking carefully, because over the next couple of months, if this trend continues, which normally it will with seasonality on the supply side, we're sure hoping that demand jumps off the sidelines and gets into the game to kind of absorb some of this product.
Which brings us to our listing inventory barometer, which everything we've showed you is not as real time and as helpful in the moment as making a decision as this one. So for those of you that are thinking about, is it the time to buy? Should I be selling my home? Let's take a look here and see what this is showing us. So what we have is by week, the number of new listings, the number of pending sales, and then the ratio. And so, going back here, we have some that were actually under 100%. So that means that there was actually more pending sales than there were new listings. And then the rest of the weeks, that means there was more new listings. And you can see the 100% line. So visually, you can see the few periods over the last several years where there was actually more sales than listings. And wow, what a jump here, in the last couple of weeks that we haven't seen in several years.
Right.
And then taking into account with expired and withdrawn listings, which were really a non-factor going back to 2021, because nobody's listings were expiring before they sold. Everything was selling really quickly. Now this has become more of an issue, so we're looking at it more closely. And so you can see, taking that into account, was inventory growing? Was it shrinking in these areas? And we're back to growing again. And again, outpacing the previous periods that we've been tracking of like 2 years. Lee, is that about what we've been doing?
Yeah, three years or so.
3 years. So it's quite interesting to see it visualized this way.
Right. And I think having both the numbers and the visualization on the screen together is a great view. So if you look at the table and the red outline of the past 4 weeks, and you look at the barometer ratio column, you're going to see the first 300 plus ratio, 358%. That means there was just a heck of a lot more supply than demand. And you average it out for that 4-week span, it's well over 200%. So let's go to the next slide, David, which is yet another innovative view here from the Shapiro Group, which is separating out the actual performance of the new listings and pending sales.
Yeah, I think if you're going to listen to one thing of all the data we're talking about, this one to me stood out the most, Lee. So I'll let you explain it.
Yeah, so basically what we're looking at is a timeline. The blue line is the number of listings per week. The red line is the number of pending sales. For those of you that follow our reports on a regular basis, you'll note that one of the things we comment on is how in balance the Austin market has been, that when new listings go up, sales go up. When new listings go down, sales go down. And you're highlighting that period from a couple years ago when it was really in sync. And that was kind of continuing up until right about March, David. And so you take a look at the more recent numbers, the more recent data points there, and there's a big divergence, there's a gap. And so visually, if we take a look at the last 3 data points of the pending
1, 2, 3.
Yeah, those are the new listing data points. Two of those three data points are in the upward direction.
So these two, right? So if you're going to draw a
Correct.
trend line, you'd kind of become in this direction.
Yes, correct. If we do the same thing on the demand side with the pending sales, two of the three are in a downward direction.
Here was our, looked like we had a trend, but now it looks
Right,
like the trend might be coming back this direction.
right. And what we don't want to see, trust me, it's not good for anybody, is if those trend lines do begin to diverge. If we start to see the new listings outperforming the number of sales, we're going to have a shift in the supply demand dynamic that's been such a stable market, such a balanced market. When we talk about stability, we're talking about pricing and value. Obviously, the number of sales is down, those type of things. When we're looking at stability, we're thinking about equity. What I'm saying is that this is the first time since you and I have been doing these reports over the past several years that I'm seeing this kind of divergence in the underlying fundamentals. So I'm hoping, it's my genuine hope, that when we run the numbers next month, this divergence is going to shrink down and get more in alignment with where we've been. I don't mean to be doom and gloom. We often downplay the national media for clickbait, but I'm just saying, based on my experience, having been in downward trending markets before, we don't want to see this. We want to see this tighten up on our next report.
Yeah, maybe the most bearish video that we've put out here in the last 3 years, just looking at this and being like, ugh. And we don't try to pay attention to the clickbait media, nationwide media that's very clickbait, but a lot of people do. And it's impacting the sentiment, which is impacting how they're
Right.
acting out there as buyers and sellers. And there's really feels like it's slowed down. We sold a listing in Bolden and we've gotten multiple calls from agents being like, how did you do it? Like everything else is sitting in this neighborhood. Like what happened there? And I think agents are really feeling it. Of course, their sellers are feeling it. So, I mean, I think one thing that comes to mind, I'm curious your opinion since you've been doing this for 40 years and you've seen so many cycles, Lee, is the chasing the market down. Are we at a point where sellers need to start thinking about that and not get stuck in the, okay, let me just drop the price 10K every month or every 2 weeks and get ahead of it and be like, I just need to drop this. If I need to sell, I need to drop this to a price where it's going to sell now and not be still trying to think about this in 3 months.
No, absolutely. So, we've talked in recent reports about the discretionary seller and how Austin seems to have a high ratio of sellers that can pick and choose their timing because there's alternate uses, whether it be renting the property out or otherwise, rather than selling at a figure they don't want to sell. However, our fundamentals have always been that real estate transactions are typically driven by life cycle events. People need to sell, growing family, getting married, so on and so forth. Yes, if you have a life cycle event and you need to sell, my guidance at this point would be a little more on the aggressive side to price it just slightly under what we think the pricing should be and try to get that thing sold, because the uncertainty that the statistics that we just looked at, to me, are real. In the past, when we've looked at potential dips in the forecast, it's been kind of on speculation and market sentiment, but not necessarily data driven, particularly over a 2-3 month period. So now I think there is a little bit of risk. And so my guidance would be, yes, if you do need to sell in a time frame, there's an old saying in real estate, if you don't have a deadline, you don't have any risk. If you have a deadline, you may have some risk. And I'm starting to see that. So let us help you figure out what the right pricing strategy is if you are in that life cycle event that says it's time to move.
Yeah. Well, let's keep moving here and let's talk a little about mortgage rates because that's certainly having an impact on the market, the lock-in effect that we have spoken so much about. And Lee, what are we seeing here?
Well, interestingly, we're down just a little bit over the past week, still hovering under 7%. So the rates appear to be relatively stable, David. I think that folks are inundated with news. Even if you don't read the news, you're seeing headlines. And so all the tariff talk and things of that nature I think are dampening market sentiment more so than movements in the interest rates.
Yeah, I did hear some talking heads today talking about there's an expectation that Powell and the Fed are going to cut rates in their next meeting, which I think is this month. So we'll see what that leads to, if that impacts mortgage rates much.
Right.
The, there was a thought that the trade war was going to push people into bonds, bond rates would come down, and that would help with mortgage rates. That hasn't been the case. So, it's hard to know, but this could be the one thing that helps counteract and helps push some demand. And we've often said that recessions aren't bad for real estate because the big instrument that the government has to stimulate the economy is lowering interest rates. And so if they can lower interest rates to help stimulate the economy, that's going to impact mortgage rates and the real estate market positively. So curious to see what happens here. That's maybe the one positive thing that could be coming down the pike. Hopefully others.
Yeah.
Well, if you got a lot out of this, please share it with a friend, give it a like. Don't hesitate to reach out if you have questions. Go ahead and comment below with any thoughts or questions that you have. What have you been seeing in your local market? Do you see a lot of listings popping up? And if you want to chat, go ahead and book a call. There's a link below, or just shoot us a message or text, Instagram, whatever works best for you. And we'll get back to you and find a time to chat. All right. Thanks for joining us, everybody. We'll see you next month.
Thanks, everybody.